Deven Choksey, MD at GAAR Choksey Securities as well joins in. Deven, hi, morning. Firstly, what did you make of the GAAR push back to about 1 year? And the bigger question really is it a sufficient move to bring FIIs back into the market?
Yeah, good morning. I think there are three issues which they have very well covered in this particular arrangement of pushing back GAAR by 1 year. The first issue that they covered well is giving them the breather space for those FIIs who have been carrying illegitimate address. I think to give an opportunity to them to change over to a legitimate address, so that at least I think they would have a strong claim on the taxation aspect of it. So that is the first positive point that I see which has happened. The second positive point which I see is that in the private equity space, they have reduced the tax rate from 20% to 10% when the company is unlisted. So from a point of view of giving a proper exit to the investment which some of the FIs have carried out in private equity space, they are given 1 year window for adjusting this particular aspect. So this is also again I think a very positive point. And the third most important point is in the process I think which has come out is that because of this arrangement which has been pushed back by 1 year, at least I think the immediate panic in the market for withdrawal of funds would stop, and that would give stability to rupee. So indirectly it gives the best benefit to the overall system, and probably rupee which touched 54 other day and probably started turning back would probably once again go back into 50 odd kind of a level. So from that point of view, this provisions or this arrangement which they have extended for 1 year is appearing positive. And I do wish that the provision pertaining to the levying the onus of proving the tax evasion in the hands of the tax authorities vis-a-vis the SSE would go a long way in reducing the kind of harassment to the SSEs. So from that point of view also, this particular arrangement is I think more than adequate, as I would call it, and should be seen positive over next 1 year and thereafter.
Morning, Deven. Even though the GAAR stress is officially over, do you think this may not nudge the needle much for Indian markets? Because currently we are pitted against a couple of key events. Global macro is challenging and there is a visible fear of risk off.
Yeah, Nikhil, good morning. Yes, I do agree that I think this is not the one issue on which you will get, I think, a lot of money into the market. But yes, I think it is bringing a lot of stability and confidence back into the system. That is one important point which I wanted to make. The global issues are going to remain challenging. They are not going to go away easily. I think as far as the global environment is concerned, they are going to be challenging, remaining challenging for some good time to come. So from that point of view, I think one will remain a little nervous. But at the same time, out here, we have been having a lot of potential for growth. We have been stalled because of the various issues as far as the growth is concerned. If government starts taking some of the concrete directions and the actions in the internal economy, then probably the things could revive faster and that could bring back the interest. So I'm relatively more okay at this point of time from the point of view of looking at India market and Indian economy, that we would probably kickstart some of the processes, some of the stalled projects, and probably see investment coming into our markets. Relatively more confident vis-a-vis the global environment as of now.
Deven, the other concern, of course, for the market is that participation levels have been very low. What is the next trigger that could actually bring some force to the market?
It's a good question, actually. Honestly speaking, I think no other triggers are available at this point of time for increasing the participation. The general feeling is that the amount of trading which is happening into the market, which is possibly dissuading the genuine investors from participating into the market, because those investors who have been taking position on the long side and probably finding themselves affected because of the rampant trading taking place into the system is probably the root cause of this kind of a lack of participation. To increase that participation, few things will have to happen. The entry of the trading funds in the domestic space should also be allowed, so that at least I think they can adequately meet the kind of a pressures coming from the global ETFs. That's the first point. Second point is that FI transaction volume should be definitely broken up into parts to give transparency from the trading as well as from investment point of view, so that investors then can take a properly considerate view. And the most important aspect is the market. If the market starts reviving, then probably I think the participation would increase. As of now, we see market remaining in tighter range and probably it's not moving up. If it starts showing the signs of moving up with the confidence level coming back into the system in the economy, because it's completely waned out at this point of time, that could possibly bring back the participation into the market. So there are a series of measures which may have to happen, and then the revival of the participation would take place into the market.
Deven, what have you made of the banking earnings so far, and what scalability do you think the banking space could actually project in the next few quarters, considering most of them are out now?
By and large, I think most of the banking companies have come out with good set of earning numbers, and leave aside some of the smaller size public sector banks, or maybe I think one or two exceptions to that. I think generally you have seen a good amount of earning coming in. Largely to do with the business model in case of private sector banks, where they have higher amount of fee-based income continuing and the credit growth continuing from the relatively safer areas, which is basically helping them to maintain their NIMs also and lower amount of NPS. So I think from the point of view of earnings, definitely banking stocks have not disappointed. On the contrary, they promises to show better earnings going forward, with the credit growth picking up once the policy and the implementation of reforms, I think, start taking place in the infrastructure space. Would see higher amount of offtake of credit and would allow the amount of higher credit also taking place. So banking stocks are relatively looking more positive. To my mind, I think in the rally, if market gets into, then banking stocks should lead the charge. So definitely I think it's a positive move going forward for those who invest in bank. The fortunate part is the valuation. Many of the banks, even if you look at ICICI Bank, Axis Bank, even for that matter State Bank of India, which are relatively larger size banks now, they are available at a valuation which is far more comfortable in this corrected market. So this is once again making a case for buying them into the portfolio.